Good morning, multi-bagger hunters, and welcome back to the Daily Hunt. It's Saturday, February 21st, 2026. We've been sifting through a lot of data from yesterday, Friday the 20th, to bring you our latest insights.
And it was quite the mixed bag, Ethan. We saw a really high volume of discussion around some familiar tech giants, but also some interesting, albeit risky, chatter on newer players. Overall, I'd say the market sentiment is a real blend of cautious optimism and some deep financial concerns in certain corners.
Absolutely. A fascinating day, full of potential hidden gems and, well, some areas demanding a very close look. Let's kick things off today with CrowdStrike, or CRWD. Now, the buzz around CRWD yesterday was all about this recent stock drop. The community, they really believe this dip is completely misguided, an irrational market overreaction to a new AI code security tool. Many users were saying, hey, CrowdStrike's core business, that's endpoint protection, threat intelligence, it's totally distinct from code review. They see AI as actually increasing the need for robust cybersecurity. It's a classic buy the dip narrative brewing.
Well, Ethan, while that user sentiment certainly sounds appealing, my KPIs are flashing some very significant red lights here. The debt-to-equity ratio for CRWD is frankly exceptionally high at over 20. That indicates a massive reliance on debt, which is a substantial financial risk. And let's not ignore the price-to-book ratio, which is nearly 25. That's a super premium valuation, even for a growth company, and it suggests investors are paying a hefty price for future potential.
But Brooke, their revenue growth is still strong at over 22%. That shows the underlying business is healthy and expanding, aligning with the idea that cybersecurity demand isn't going anywhere. News reports about continued product integrations, like with Qualtrics, show they're pushing forward.
True, the revenue growth is strong, and that's a positive, but they're still unprofitable with a negative net profit margin and EPS. When you combine that with such high debt and a stretched valuation, it just elevates the risk profile significantly. We previously had CRWD as a stay away in early December and January. Given these financial red flags, my AI-generated insights suggest we're not upgrading that.
So the final verdict for CrowdStrike, despite the community's enthusiasm for the dip, is a stay away for now, primarily due to those underlying financial risks. All right, moving on to a household name, Microsoft, MSFT. Now, we saw a lot of activity around MSFT yesterday, and despite one very bearish headline post, the overall sentiment was overwhelmingly bullish. Users were quick to point out MSFT's incredible profitability and diversified revenue streams, dismissing minor complaints as just personal trading woes. We're talking about strong fundamentals here, especially with their continued leadership in cloud and AI. Insider buying, it's a very positive signal too.
I have to agree, Ethan. My KPIs for Microsoft are looking incredibly solid. A net profit margin of nearly 39% is just phenomenal, truly one of the most profitable companies in the world, as some users highlighted. And the revenue growth at over 16% is very healthy for a company of its size. What's really compelling is the significant insider buying, over 7% net shares purchased by insiders in the last 6 months. That's a huge vote of confidence.
Exactly, and the news backs this up. They're exceeding EPS estimates, accelerating demand in cloud and AI, and their deep partnership with OpenAI is strategically positioning them for the long haul in the AI space. Yes, there was a mention of Azure supply constraints, but that really speaks to high demand more than any fundamental weakness.
Given its robust financial health, that strong insider confidence, and clear strategic positioning, MSFT really does stand out. We've seen MSFT in our buy category many times before, and while it had a stay away and cautious buy mention earlier this year, these current metrics and positive news definitely warrant an upgrade.
For Microsoft, MSFT, the final verdict is a strong buy. And finally today, let's talk about Alphabet, Goog. We actually saw 2 very bullish posts about Goog yesterday, both implying massive gains. One user was absolutely kicking themselves for selling calls too early, missing out on thousands. That tells you the stock had significant upward momentum. The community is seeing Goog as a real millionaire maker opportunity, especially with its aggressive push into generative AI and challenging NVIDIA in the AI chip market.
Those are certainly exciting stories, Ethan, and the underlying KPIs do support a very strong picture. Alphabet boasts a solid revenue growth of 18% and an excellent net profit margin of nearly 33%. That translates to significant earnings and efficiency. We're also seeing positive net insider buying, which is always a good sign of internal confidence. However, the price-to-earnings and price-to-book ratios are quite elevated, indicating a premium valuation.
True, it's a premium, but it feels justified when you look at the potential. UBS is projecting up to $23 billion in cloud revenue just from their generative AI initiatives alone. That's a massive growth catalyst. And the news of them topping the market recently, combined with analyst optimism, suggests a very strong long-term trajectory. Any minor setbacks like Waymo or some legal challenges seem dwarfed by the sheer scale of their AI ambitions. So while it's priced for growth, the fundamentals are exceptionally strong, and the strategic moves in AI are truly transformative. Alphabet has been a frequent buy on our show, and considering these latest insights, I agree with an upgrade from any recent stay away or cautious buy. So our final verdict for Alphabet, Goog, is a buy. All right, so after all that analysis, here are today's candidates for deeper investigation from the Daily Hunt. Investigate as buy, Microsoft, MSFT, Alphabet Inc., Goog. Investigate as cautious buy, none. Investigate as speculative gamble, CrowdStrike Holdings, CRWD. This podcast is for informational and entertainment purposes only. The content is generated by artificial intelligence and does not constitute financial advice. Listeners should conduct their own research or consult a licensed financial advisor before making investment decisions. We are not responsible for any losses incurred. The market is a wild place, and knowledge is your best asset. Thanks for tuning in to the Daily Hunt for Multibaggers. We'll be back next time with more AI-generated insights. Happy hunting!